Also have Maruti's numbers flashing for you at the bottom of your screen. The net profit seems like a big beat as against street expectations. 3,700 crores versus 3,000 crores. We'll have to look for, some more internals, whether there has been an exceptional higher other income or maybe an exceptional to, warrant this kind of an outperformance versus street expectations, because the revenue is still, largely in line, a little around 37,000 crores. This versus, again, expectations of 38,000. So a mild 1,000 crore miss on the revenue is what Maruti has reported. It remains to be seen how the operational performance has been as well. Okay, the beat is EBITDA-led, and that explains the up move that we're seeing on the stock. 4,800 crores, closer to 4,800 crores on the company's EBITDA margins, just around that 13% mark, Ekta.
Yes, absolutely. I think the EBITDA performance is really, the operating income is really the big kicker for Maruti, which is trickled down into the net profit. So the EBITDA margin has come in at 13%, 12.9% to be precise, versus 9.3% same time last year, and versus 10.8% in terms of expectations. So it's really within that space, despite a lower revenue, where they've managed to outperform. We'll probably have to go through the P&L to see where exactly the cost savings have come through, because they have reported a lower revenue, and despite that, there's been a significant margin beat which has come through. Net profit up 80% on a year-on-year basis. On a reported basis, we were working with a 49% growth on a year-on-year basis for the profitability. So definitely a big thumbs up, which is really based on the operating performance for Maruti and down to the profit.
Yes, Ekta, it could also be a factor of their product mix, because the share of utility vehicles had increased in the company's overall mix, so that could have further aided their EBITDA as well. I think we do have Sonia with us. Sonia, looks like a big operational beat that Maruti has reported so far.
Oh, absolutely. This is a very good set of numbers that Maruti has reported, well above what the street was estimating on the operational front. And as you rightly pointed out, it is because of the higher share of the SUVs in the product mix, because of which the overall margins have been much better than expected. Now, we were expecting about 10.8% margins. Remember, same time last year, Maruti did 9.3% margins. And compared to that, margins have come in at 12.8%. So this is a big beat, both in terms of what the street was expecting and compared to what they did same time last year. Apart from having a higher share of SUVs in their portfolio, there was also a price appreciation, price hikes that the company had undertaken, as well as lower raw material costs, and that aided margins too for the company. If you look at the profitability, 3,716 crores is well above what the street was estimating. It's about 700 crores higher than the 3,073 crores that the poll had put through. And this is over a 60% jump that we've seen in the profitability. Of course, we need to understand more about whether there is any additional other income, or whether the other income is higher. But for now, the core EBITDA performance, which is 4,784 crores, is much higher. It's more than double of what the company has done same time last year. But let's not forget that the stock is also up 25% in 2023. Of course, as we move along, there are many positive triggers for Maruti. A large chunk of their portfolios will be the SUV driven, and that will mean higher margins for the company. So does the margin band now move higher by the end of FY24? That's the big question to ask. Also, you have, the slew of new launches that are coming through, and whether there is any more raw material fall that the company will price in to their future performance. So all of these are questions and commentary that is awaited from the management, but very good set of numbers, well above what the street was estimating on the operational front.
Abhishek Gaoshinde, who is the Deputy Vice President of Research at Sharekhan, joins in. Abhishek, the street is wondering whether this margin outperformance will sustain, and now will people actually structurally increase their margin estimates for Maruti going forward? What are your thoughts? Will you, increase your assumptions going forward because of this higher utility vehicle contribution?
Definitely, the margin performance has surprised us, although it was Maruti was expected to come out with a strong set of numbers, given that this quarter the mix has improved, and there was expectation of a gross margin expansion. So, but even though the reported margins have been much higher than that what we and the street has been expecting. Now, going forward, that what we are seeing that this is a consecutive 6th or 7th quarter when Maruti has reported YY expansion in the margin, and considering that this was the consecutive 3rd quarter where the adjusted margin is about 10%. So now what is happening that your volume mix has been improving. Maruti has been aligning with the market. The volume mix in this, the UV share in the overall volumes have been improving, and the market share in the UV is also improving. Second, on the EBITDA margin side, on the margin expansion cycle has been continued, and this would result into further earning growth expansion. And as long as the earning growth expansion cycle is continued, we will see that the valuation would continue to remain high, and the investor would have ease to assign it a higher valuation, given that the EBITDA margin is still far below than that what its peak EBITDA margin of above 15% during 15, 16, 17. So I think that stock should have to react, continue to react positive on this kind of numbers.
All right. We also have Himanshu with us. Himanshu, Maruti as a stock has performed well. In fact, from the start of this year, it's up around 27%. Despite this performance, do you think it can continue to do better from here on? The stock doesn't seem to be stopping now, up almost 3%.
Yeah, sure. So, hi, good afternoon. And yeah, I agree that Maruti's performance has been good, but it has been backed by their increase in SUV portfolio, which the company has been concentrating on. And today's beat on margin is a reflection of that better than expected SUV portfolio performance. And I think if that continues, Maruti stock should continue to go upwards, and we have more room left for the stock to improve.
Okay, all right, gentlemen, thanks very much for joining in and bringing us that opinion with regards to Maruti.